I think that it is the central banks and their purchasing that has certainly put a floor underneath the price of gold. But if I had a gun to my head, I would tell you that it should be a hell of a lot higher based upon what we see in the world. The fact that it's not is a testament to the Western ability to control the narrative until they can't. This is a situation where the biggest money in the world understands where we're going. They are using the suppressed and massively over leveraged Western paper market system to run cover for their repositioning and de-dollarizing, enough so that it is actually able to allow gold to quietly rise. I mean, look at it this way as well.
The continuation of global geopolitical tensions and the easing of the hawkish policies of the world's central banks has allowed the price of gold to continue its upward path, with gains reaching the resistance level of $1990. According to Andy Schectman, gold should have a much higher value than it currently does. Over the past 18 months, there has been a substantial accumulation of gold, primarily by central banks. Central banks collectively increased their gold reserves in August for the third consecutive month. This accumulation of gold by central banks has reached unprecedented levels, a phenomenon not witnessed before. The implication is that these central banks see immense value in gold as an asset and have been strategically stockpiling it. This, in Andy's view, is one of the key factors supporting the current price of gold. He mentions that the Bank of International Settlements reclassified gold as a Tier 1 reserve asset in 2019, alongside U.S. dollars and U.S. treasuries, signifying its importance. Historically, the primary Tier 1 reserve assets for central banks had been U.S. dollars and U.S. treasuries. The BIS underscored its importance as a store of value by including gold in this category. The ongoing accumulation of gold by central banks, despite attempts to suppress its prices in the paper market, emphasizes the significant role of gold in global finance. Despite these compelling reasons, Andy believes that the price of gold remains lower than it should be in light of the current global economic climate. He suggests that this discrepancy is mainly due to Western powers' ability to control the narrative and maintain the status quo in the market. Andy highlights that gold has hit all-time highs against major currencies like the Chinese yuan and Japanese yen, due to their depreciation against the U.S. dollar. He believes this may signal a shift in the global market, especially as gold's volatility is now lower than that of U.S. treasuries, a rare occurrence in the past 50 years. We will bring you clips from Andy Schectman's interview with SOAR Financially. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
And gold should be a whole hell of a lot higher than it is, Kai. That's the truth of it, is that you have, over the last 18 months, not only the wealthiest, most well-funded, but also the most well-informed traders on the planet accumulating gold at record levels that no one's ever seen before, and that being the central banks. And when you have massive central bank purchasing, I think it certainly is one big reason why gold has held up well in the face of supposedly real rates being positive. And I would argue that that's really not true either, because first of all, gold and real rates are supposed to move inverse of each other. That's called Gibson's paradox. But I think the market understands that the inflation metrics by which the CPI gauges rising costs is flawed, that real interest rates are still negative. But what you are seeing, I think, is a realization. Look, for the first time in 45 years, U.S. treasuries now have a higher downside volatility than gold. Okay? And another way of saying that is that treasuries are no longer the safest alternative. And that's a very, very damning statement, because the treasury market has always been considered the safest, most liquid market on the planet. And when measured against performance, for the first time in 45 years, gold is now considered a safer, less volatile investment than U.S. treasuries. Think of the Tier 1 revision of gold now for a moment, where prior to July or April of 2019, since the end of World War II, there's been one Tier 1 reserve asset for central banks. That's been U.S. dollars and U.S. treasuries. Well, a couple of years ago in 2019, the BIS, the Bank of International Settlements, quietly reclassifies gold as the only other Tier 1 reserve asset. And the acquisition of gold by the central banks using the Western market suppression, the paper market suppression, has enabled them, even with the suppression of paper, to drain the cupboards so much of investable silver that the price is rising. And again, I think that it is the central banks and their purchasing that has certainly put a floor underneath the price of gold. But if I had a gun to my head, I would tell you that it should be a hell of a lot higher based upon what we see in the world right now. And the fact that it's not is a testament to the Western ability to control the narrative until they can't. Look at last week, gold hit its all-time high against the second and third largest economies in the world, in China and Japan. Gold is at all-time highs against most currencies. It's the fact that the dollar, being the cleanest shirt in the dirty laundry hamper, is blurring gold's role as being a safe haven asset in times of instability. The rest of the world understands that. People in this country have been blinded by a dollar that is irrationally strong until it's not. And certainly seeing the fact that the first time in almost 50 years that gold is considered less volatile than the treasury market, this is a phenomenon that I think might wake up certainly the people in this country sooner than later.
One of the intriguing financial trends of 2023 has been the de-dollarization movement. This is an effort by a growing number of countries to reduce the role of the US dollar in international trade. Countries like India, China, Brazil, and Malaysia seek to set up trade channels using currencies other than the almighty dollar. Andy suggests that the world is gradually shifting away from the US dollar as the primary settlement currency. He envisions a scenario where gold is pivotal in shaping a new financial system. For instance, the BRICS states are planning to launch their gold-backed currency, which could potentially threaten the dominance of the dollar and euro in the global market. Furthermore, Andy highlights vulnerabilities within the banking system, citing cases such as Bank of America's significant unrealized losses and substantial positions in precious metals derivatives. Bank of America reported unrealized losses of $131.6 billion on securities held until maturity in the third quarter, an increase from nearly $106 billion in paper losses in the second quarter. Andy speculates that banks may be shorting gold and silver to such an extent as to bolster the perception of the US dollar and the Western financial system as stronger than they are. Let's get back to the interview.
All the movements or manipulations in the world that the Fed thinks that they can intervene in a market as big as the US bond market, when the rest of the world says we've had enough of your massive debt accumulation, we've had enough of your wars, enough of your hypocrisy, enough of your coercion, enough of your meddling. And by the way, you're going green. You don't need oil anymore from OPEC or Saudi Arabia. So we're all joining this new union that represents the majority of humanity, and it's not going green. And we don't like the way you're doing things anymore. So that's it. And I think it's a very simplistic way of saying that's kind of the big picture. And little by little by little by little, it changes until bang, the dollar is no longer the sole settlement currency and gold is backing a new system. So for those people who look away from gold because of this moment in time in August where the BRICS said, well, let's pause a little bit. We'll come back next year, do it the right way instead of shotgunning it the way the US does, reactionary. No, let's do it the right way. Let's have a big enough group of people with enough influence and enough control of the global commodity structure where it really makes sense when we flip the switch. And so, if anything, this is a gift for those people who haven't yet realized where we are and where we're going. And I would simply say this, Kai, that if it were just price, fine. Okay, it doesn't make sense. It's counterintuitive, but that's exactly what they're doing. That's why they are taking advantage of the manipulated, over-rehypothecated, over-leveraged COMEX and LBMA price setting system that allows them to pickpocket the world's commodities, whoever's dumb enough to let go of them at these prices. And that's why they're not bitching. Once they own it all, I think what they will do is they will move the price setting mechanism to one of two places, either Abu Dhabi and the United Arab Emirates, who has joined BRICS, or the Shanghai Gold Exchange. And the COMEX and the LBMA will be exposed long before that for what they are. a rehypothecated leverage system where right now today there is 1,600, almost 1,700% more paper contracts in the silver market than there are bars behind it. Do you see a problem there? And at some point, this just becomes too big for the Fed to handle. And you add on top of it, the big banks around the world, China and Saudi Arabia and Japan, they're dumping treasuries. So you have treasuries being sold, you have interest rates rising, you have a banking system that's on edge. You know, you have all of this stuff happening all at once. People should be flocking to gold. And what blurs it and what throws them off the scent is the fact that you can rehypothecate, you can manipulate and distort the commodity structure so much so that people don't notice it, except the people pulling the strings, and they're the ones buying it at pennies on the dollar. We have a banking system that is completely and totally over leveraged and undercapitalized, where a company like Bank of America can issue $131 billion in unrealized losses on their balance sheet here in the third quarter. $131 billion, and the market doesn't go nuts on that and short the hell out of that stock. Not to mention they have $82 billion in precious metals derivatives, including what Ted Butler believes 32 billion of that is a billion ounces short in the silver market. Why are they short gold and silver like this? Do they know something we don't? Are they being told to suppress the price of gold and silver to make the dollar and the Western system appear stronger than it is? We have lawlessness in our cities. You know, San Francisco, Philadelphia, New York City, take your pick. We have divisiveness in this country, where people are divided, not unified whatsoever. And, you know, it's a situation where I think this economy not only is undercapitalized, over leveraged, very, very ununified. We are very divisive. And I don't think people have any idea what's coming down the pike.
Gold is expected to rise further, possibly hitting record highs driven by central bank accumulation and reduced volatility, indicating a significant shift. What's the global future for gold's price and role with central banks accumulating it and changing dynamics? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.